market is getting cooked in every direction, but I think that there's a silver lining. We might be closer to a bottom than you might think, and I'm going to explain that in this video. But first, my name is Artie. I've made over $250,000 trading, and I plan to make $250,000 more this year. And in this picture, you see me outside my house I just bought, but I didn't buy my house outright. I put a down payment on the house, and I'm paying 7.6% interest. So I need the rates to go down. But that's besides the point. I was outside. It was 71 degrees, beautiful, smoking a cigar, not a care in the world. Little did I know that when I woke up today, my account would be down over $10,000. But I'm not panicking, and you shouldn't either. So I'm here to explain why is this happening in very simple terms. Where's the bottom? Will Trump tackle this weekend? And what's my plan? What am I buying? And all I ask for you in return is that you leave a like and you subscribe on this video. It's completely free. Let's take a look at this heat map. The first thing you notice is Red Sea. Second thing I noticed personally is Meta. Meta is down almost 30% on the year. Why? That's because of something called FUD. Fear, uncertainty, and doubt. The markets are typically forward-looking, right? So they try to predict stuff before it happens. So just in the case of Meta, that's really three things that are happening. Number one, they're spending tens of billions of dollars on AI. Now, a year and a half ago, this was no problem, but now people are starting to realize that companies like Meta and Amazon are going to take huge depreciation hits on the amount that they're investing in these chips and AI. That means these depreciation hits are going to show up on their earnings report and hurt their bottom line. Markets are already pricing that in ahead of time. Number two, without getting into specific details, Meta, along with Google, for example, they're involved in a crazy lawsuit. And they're expected to pay out over $6 million. And that might seem like nothing. And it is nothing for them. But the problem is this opens up a can of worms for a class action lawsuit. Now all of a sudden you have Billy Bob and Joe wanting to sue Meta. And the markets are forward looking. And number three, well, let me just show you. Number three is this guy right here. The president, the firecracker of a president we have, love him or hate him, Donald J. Trump. It's no secret that this war going on in the Middle East is really affecting everything. That's the main reason why you see all of this red. And why that's happening is because of oil. When oil spikes, inflation spikes. When inflation spikes, the Fed cannot cut rates. And unfortunately, the United States is not in a position where we're strong economically. We were already having private credit problems before this war even took place. And this conflict is only escalating. We're sending troops on the ground this weekend. If you're watching this, I'm recording this Friday. If you're watching this on Saturday, you might already see the news that they're out there. The longer that oil stays elevated, the more of a chance we get sent into a recession or stagflation. That is the worst case scenario. But I don't think that that's the base case scenario. But that is what the market is pricing in. But if you know Trump, we've all heard this, Trump always chickens out. For a while, I think this is what was preventing the QQQ in specific, the NASDAQ, from entering into correction territory because everybody was thinking Trump is going to tackle. And he didn't until now. The markets currently, as of today, are sitting in extreme fear. But that being said, I swear to God, I've seen this number at 0 before. So that doesn't mean we're at the bottom yet. But we're certainly getting there. Unfortunately, when the market is in extreme fear, most retail investors do the wrong thing. For God's sake, please remember, when the market is in extreme fear, you should not be selling. This is the time when you start accumulating things. You dip by here, dip by there. If you want to sell when the market goes into extreme greed. Unfortunately, most people do this. This right here, this is you. Throwing away your Bitcoin. Throwing away Meta. Running downhill. I'm here to prevent you from making that mistake. At least this time. The VIX. A lot of people have their opinions on the market and try to time the bottom perfectly. I'm here to tell you that that's impossible. But the VIX is a good gauge of when you should be buying. There's never been a time period in history where the VIX has spiked over 30 and it was not a great buying opportunity. Did it call out the exact bottom? No. But was it a good time to buy? Absolutely. As you can see here, Back in Liberation Day, the VIX peaked at around 60. Amazing time to buy. We all know what happened. The stock market skyrocketed. Right now, we're sitting at around 31. I think this is the time to nibble a little bit. Is this the time to go all in and use up all your dry powder? Absolutely not. But this is not the time to sell anything either. This is the time to start accumulating. If the VIX were for some reason on Monday, for example, let's say things only escalated and the war going on in the Middle East only got worse, that is the time for you to nibble even more. Little by little nibble. Little by little nibble. If for some reason the VIX goes over 50, you better go sell your grandma. Go and sell your shoes. Go and start selling your grandma panties. Anything. Get your hand on some money and invest it in the market. Invest in the market. Close your eyes for a couple years. You'll be all right. Not financial advice. Please don't go on eBay selling your grandmother's panties. Let's take a look at the QQQ. Like I said, we've officially entered correction territory. From peak to where it is right now, we are down 12.2%. That is a nice size correction. But as you can see on the chart, I'm expecting QQQ to get lower to around 530 to 535. Currently, it's at 560. That leaves about another 5% for it to fall. Now, I am expecting a bounce before we get there. And also, remember, the market doesn't bottom on good news. By the time good news starts to come around, the market has already made its way back up. The market bottoms when everybody is in despair. When people are throwing in the towel, they're selling out of their positions because they think it's going to go lower. That's when the bottom is in. So hold on tight. Let's take a look at Microsoft. Microsoft is down almost 37%. It's down $205 from its peak. That's pretty oversold. We are now entering dip buying territory. Between this price right now, which is $356 to about $340, this is where you should be accumulating small shares of Microsoft. I believe that this market will have a short-term rip your face off rally. What does this mean? This means that we're going to have a day or two where the market goes up 5 to 6%. And I'm talking about QQQ and S&P 500. On some stocks like Microsoft and Meta, we might see 10 to 12% upside in a day or two. And I want to be involved in that. So I've personally been nibbling a little bit into Microsoft and Meta for a short-term bounce play. But I've also been dip buying into my long-term portfolio. I've been buying some things like Elf and some software companies like Adobe and this and that. I don't want to explain my whole portfolio because because the next video I make is going to be explaining my entire position. I've recently bought about $20,000 into Elf Cosmetics, for example. I'm down 19% currently. But I have strong opinions of that, and I'm going to get into that in my next video. But I'm here to tell you guys, I understand your portfolio has been going down for like 5-6 months now, and it's just been slowly grinding down. And I know it's demoralizing. It's been demoralizing for me as well. But relax. That moment when everybody starts to panic, the worst is done. And I think honestly the worst has already been done. We might see a little bit lower, but I don't think we'll see much lower. We might see another 5 or 6% down on QQQ and S&P, but I think that's where we're bottom. I do think that Trump will tackle. My prediction is that Trump will tackle. We will make a deal with Iran. The strait will open back up. Oil will plunge back down to $60. Trump is going to look like the hero. The Republicans are going to win the midterm, and the market is going to go flying. Come back here in a month or two and see if I was right or if your next favorite YouTuber was right. I'm willing to bet that I'm going to be right, but of course, do your own due diligence. This is not financial advice. I can only tell you what I'm doing. I can also see on X, 70% of sentiment out there is bearish. There's still another 30% that's bullish. I would like to see that come down a little bit, maybe to 20% that's bullish, and I think that's where the bottom is. But regardless, I'm going to be buying. And in my next video, I'm going to show you exactly what I'm buying, the dollar amounts that I bought it in, and subscribe so you can see my portfolio in the next video. I don't think that this is the time to panic. I think if you were to go short or wanted to go short, the time to do that was months ago. It sucks because we're in a time period where the stock market's been going down for a long time, but it's been kind of consolidating and going down at the same time, so it's getting a lot of people frustrated. I kind of much rather would have preferred it to happen kind of like Liberation Day, where it was just boom, 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 and then we made our way back up. But instead, we've been grinding sideways and lower for a long time. Honestly, just looking at this chart, I feel as if this 635 level on QQQ up until it fills this gap at about 631 would be probably where QQQ stops, in my opinion. Do I think that we're going to get a 20 plus crash? It's possible, but I don't think it's going to happen. We already had a crash a year ago. I don't see why this would crash again. Company financials are still strong. Companies are still reporting great earnings. I guess we're going to have to wait and see what it looks like next earnings season, which is coming up in a month or two. We really have two problems. Number one, our commander-in-chief right now is off the meds. 1 minute he's telling us this war is about to be over. Next minute, we're going to go as long as we need. Crazy. The market doesn't like uncertainty. 1 minute he's telling us we're coming close to a deal. The next minute, the opposition, the other side is telling us, I don't know who he's working to deal with because he didn't talk to us. Is he schizophrenic? So that's one thing that's working against us or working for us. It really depends how you want to view it. But also, the economy was not that strong even before this war took place. So I do think that if we come to a conclusion with the war and we make a deal with the other side, that the market will bounce. But we've had private credit problems for a while now, right? But that being said, I do believe that if this war comes to an end, the Fed is more likely to cut rates, which might put ease on the private credit problems. If this war will not come to an end, gas will continue to spike, which will increase inflation, which will make the Fed less likely to cut rates. And listen, I don't want nobody to cut rate. And listen, I'm the number one person that wants the Fed to cut rates. Unfortunately, I bought this house and I have a 7.6% interest rate. My broke ass could only afford a down payment. So now I'm stuck with a 7.6% interest rate. So I want the rates to go down so I can refinance this so gas can go down and stocks can go up.